Welcome to Explain the Charts, where we dive deep into the latest market movements. Today, October 25th, we're focusing on Bitcoin, because analyzing the recent news and correlating it to the chart data to understand the current sentiment and predict future trends. Bitcoin has been making headlines recently, with analysts predicting a significant surge to $125,000 if Donald Trump wins the U.S. presidential election. Standard Chartered Bank analyst Jeff Kendrick expects a Bitcoin surge to $73,000 by November 5th and a further 4% rise upon a Trump victory. However, BlackRock CEO Larry Fink believes Bitcoin will rise regardless of the election outcome. The cryptocurrency market has been volatile in recent weeks, and Bitcoin's price action has been displaying bearish momentum. After briefly touching a high of $69,431 Monday morning, BTC quickly retreated to a more bearish trend. However, there are also signs of bullish sentiment, with Bitcoin whales continuing to accumulate and the mining difficulty hitting all-time highs. Bitcoin's mining difficulty, which reflects the intensity of competition, has consistently hit all-time highs, increasing by 378% over the past 3 years. While 50 BTC could be mined with a single PC in 2009, it has become increasingly difficult to mine Bitcoin, indicating a higher level of competition and a potentially more stable price. These events suggest that Bitcoin is in a precarious position, with both bullish and bearish forces at play. Let's turn to the charts to see what they're telling us. Taking a look at the daily chart, we can see that Bitcoin has been consolidating in a tight range for the past week. This range, between $66,000 and $68,000, seems to be acting as a zone of support and resistance. The price has bounced off the lower boundary of this range several times, indicating that buyers are stepping in to support the price. However, the price has also struggled to break through the upper boundary of the range, suggesting that sellers are still active. This sideways price action suggests that the market is indecisive and that a breakout in either direction could be imminent. Now let's zoom in on the last few days' candles. We can see a few interesting patterns here. On October 22nd, there was a strong bullish candle with a large volume. This suggests that buyers were driving the price up, potentially in response to the positive news about Trump's potential victory. The next day, October 23rd, saw a slight dip, but the price quickly recovered, indicating that the bullish momentum was still strong. However, the following day, October 24th, saw a sharp decline, potentially triggered by some bearish news or profit-taking. This candle, with a significant drop and high volume, suggests that sellers are gaining control of the market. Let's switch to the 1-hour chart to get a closer look at the recent price action. Looking at the 1-hour chart, we can see that the price has been fluctuating quite a bit. There have been a few bullish rallies, but they have been short-lived and have been followed by sharp drops. This suggests that buyers are trying to push the price up, but sellers are quickly stepping in to take profits. The recent drop, which started on October 24th, has seen the price fall below the $67,000 support level. This is a significant development as it could signal the start of a downtrend. However, it's important to remember that the market is extremely volatile and the price could quickly rebound. We need to keep a close eye on the 1-hour chart to see how the price reacts to this development. The 1-hour chart shows a lot of volatility, with the price bouncing up and down. This makes it difficult to predict short-term trends, but we can still identify key price levels to watch. The $67,000 level is a key support level. The price has bounced off this level several times in the past, and it's likely to be tested again. If the price breaks below this level, it could signal a continuation of the downtrend. The $68,000 level is a key resistance level. The price has struggled to break through this level for the past week, and it's likely to be tested again. If the price breaks above this level, it could signal a continuation of the uptrend. Now let's examine the 15-minute chart for even more granular insights. The 15-minute chart shows a lot of short-term volatility. This makes it even more difficult to predict the short-term trend, but we can see that the price is currently hovering around the $68,000 level. This is a critical area to watch. If the price breaks above this level, it could signal a short-term rally. However, if the price breaks below this level, it could signal a short-term dip. Based on the current news and chart data, it's too early to say with certainty whether Bitcoin will continue its downtrend or rebound. The market is extremely volatile, and there are both bullish and bearish forces at play. However, we can make some unbiased predictions based on the key price levels that we've identified. If the price breaks below the $67,000 support level on the 1-hour chart, it could signal a continuation of the downtrend. The probability of this happening is moderate, as the price has bounced off this level several times in the past. However, the recent drop and high volume on the daily chart suggests that sellers are gaining control of the market, which could reinforce the likelihood of this happening. On the other hand, if the price breaks above the $68,000 resistance level on the 1-hour chart, it could signal a continuation of the uptrend. The probability of this happening is also moderate, as the price has struggled to break through this level for the past week. The strong bullish candle on October 22nd with high volume on the daily chart suggests that buyers are still active and could potentially drive the price up. This could reinforce the likelihood of this happening. In the short term, we need to keep a close eye on the 15-minute chart. The price is currently hovering around the $68,000 level, which is a critical area to watch. If the price breaks above this level, it could signal a short-term rally. However, if the price breaks below this level, it could signal a short-term dip. This short-term movement could provide valuable insight into the overall trend. Overall, Bitcoin is in a precarious position with both bullish and bearish forces at play. The market is extremely volatile, and it's too early to say with certainty which direction the price will move. However, by closely monitoring the charts and staying informed about the news, we can make informed trading decisions.